Hello there, I hope you're good. Ladies and gentlemen, we proceed to now understanding what Forex trading is really all about. And of course, I'm your FX mentor, Bliss $1 billion, Zambia's finest trader. So in this lesson, we're going to understand what Forex trading is. Alright, so let's get started. So what is Forex trading? Ladies and gentlemen, when somebody says Forex, it is simply a short term for foreign exchange. So now Forex involves exchanging of one currency or commodity or asset for another, right? Now we need to understand that Forex is the largest and most liquidated market on earth. So if it's the largest and most liquidated market on earth, it means there is a lot of money indeed. Now it is larger than the New York Stock Exchange, if you know it, and the crypto market combined together. So now you understand how big Forex market is. So now from this example, you'd clearly tell how Forex, how big of a market it is, right? So now in Forex, what is it that you do? Ladies and gentlemen, you just exchange one currency for the other. And now this process is not physical, but you just do it online, right? So now let's have a practical explanation of what Forex trading is. So now, for lack of maybe better examples, but I would love to use this example. Forex is like a barter system. A barter system of trading is where you exchange one good for the other. For example, if you have a house dog, if you have a chicken and you want to exchange it for something else, you go to a market where you can exchange that good for another thing, right? So in exchange, you want, let's say you want to get a house dog. So you find a vendor that is there, you give them the chicken and they give you a house dog. That is what happens in Forex trading. You have currencies, ladies and gentlemen. In this case now, we don't exchange dogs and chickens and all that. What we exchange, ladies and gentlemen, is currencies. So as a Forex trader, you have access to all the currencies worldwide. And you can exchange one currency for the other as you wish, ladies and gentlemen. Now, so you just exchange one currency for the other. Now, how do you make that exchange? It's just about looking at which one is going to be appreciating and which one is going to be depreciating. And if you establish that, you can either decide to buy or rather to sell a particular currency, right? Now, we shall understand the currencies later on. So now, what is traded on the Forex market? The answer is simple, ladies and gentlemen. You trade money on the Forex market. Now, let's get it right, ladies and gentlemen. The money that is traded on the Forex market is not hard cash, but rather soft cash, should we say. Now, in short, in Forex, you simply exchange one currency for the other, like I've mentioned. You have access to all these currencies through your online trading account, which you'll be able to open with a broker. I'll be able to talk about that. I'll be able to show you how to open an account with a brokerage that we are supposed to be using. Now, think of buying a currency as buying a share in a particular country. Like, buying a share in a country, in a company. Now, the price of the currency is usually a direct reflection of the market, right? Of the market's opinion on the current and future health of its respective economy. So when you come to Zambia, what is important is, or rather what you discover is that how, sometimes our currency can tell how our economy is behaving, right? Yeah. So based on all those factors, you can decide to buy or sell, right? So in Forex trading, when you buy, let's say the Japanese yen, you're basically buying a share in the Japanese economy. You get the point? Yeah. Now, you are betting that the Japanese yen is doing well and will get even better as time goes on. Ladies and gentlemen, we buy an asset so that we can sell at a profit. So you buy when it's actually very cheap, knowing that, you know what, this asset will be doing well, so I'll buy now and sell it in future at a profit. Let's say you buy it at $1 and then later on sell it at $5, meaning you have made a profit. That is what determines when we are going to buy or sell. So once you sell those shares back to the market, hopefully you end up with a profit, right? So once you sell, you need to end up with a profit, hopefully. So in general, the exchange rate of a currency versus the other currencies is a reflection of the condition of that country's economy compared to other economies. Now, who buys and who sells these currencies? Ladies and gentlemen, the Forex market is full of traders, other traders, institution, and all that, ladies and gentlemen. So, ladies and gentlemen, it's simple. The ones that share or buy these currencies, it's your fellow traders. We don't even need to complicate things, right? We don't even need to complicate things. It's your fellow traders. Now, if you can remember, a broker is simply a middleman standing in between those small traders and the market. They give you access to the largest market on earth. Now, we shall be able to look at the brokers more in detail later on. Now, usually, retail traders do not have enough funds to move the market. Your funds aren't even enough for you to directly trade with the big banks, right? So what we need to do in order for us to access the market is we need to go through the brokers. So this doesn't mean the brokers trade for you. No, it is you who makes the decisions. They actually just give you a platform for you to be able to place your trades, right? Let me give a practical example of what brokers are. So in Africa, I don't know if it's as in my country, but I think in most African countries, when you want to marry somebody, I don't know with others, but how I understand it from my perspective in our nation is that, especially those that have really followed, the culture, understanding how it's done. Normally, if you want to marry somebody, when I will be ready for marriage, if I want to marry a certain lady, I can't go direct to the parents of that lady and tell them I want to marry your daughter. But what I'll need a foreman who will go before me and deliver the word, right? So now in this situation, we have a man who wants to marry, the foreman, and the in-laws. So let's kind of look at it from this perspective. This is a man who wants to marry a daughter, maybe this lady, so funny. And then the middleman that you have chosen is this one, and these are your in-laws. So as a man, you can go straight to the in-laws before you can actually marry their daughter. So what you need is you need a middleman who go for you and tell them, and then you later go to the market. So ladies and gentlemen, this is how the market works. The man here represents you as a trader, and then the foreman here represents the broker, and the in-laws represents the market. So you can't go direct to the market, but you need to go through your broker. So the broker allows you to be able to access the market. Now, what it is that you open an account with a broker of your choice, and then you have access to the market. So basically, that is what brokers do, right? Yeah. So we trade the following currencies on the Forex market. We have the major currencies, the cross-currency pairs, and the exotic currency pairs. Ladies and gentlemen, when you are trading, ladies and gentlemen, we have currencies that come already paired, like you have a pair of shoes, meaning there are two, right? So even the currencies come already paired. You don't need, it's not you to choose to say, let me pair this one and this one, they're already paired. But then all these currencies that we have worldwide are actually grouped in different groups. So one of those groups is the major currencies. There's a group that we call major currencies, and there's another group that we call the cross-currency pairs, and then we have the exotic currency pairs. Now let's understand what all these groups are. So the major currency pairs, these are currencies that comprise of the United States dollar, which is the USD, and any other currency of the world's most significant countries. So we have significant countries in the world. So once you get a significant country and you pair it with the dollar, ladies and gentlemen, then that currency will be put in the major currency pairs. Now let's look at the fact that these are from significant countries, meaning they are actually considered to be stable. They are actually currency pairs that are not stable in terms of how they move. And we understand that major currency pairs are actually stable, and they are the most traded. I actually encourage people that are just starting with trading to start with trading these currencies because they are stable and you can at least understand how they move. So now here is a list of the major currency pairs. We have EUR/USD. So like I say, they come already paired. So this is a pair. So EUR stands for the euro and the USD stands for the dollar. So it's called Euro USD. And we have the GBP/USD. How you pronounce this is as GBP USD. So GBP stands for Great British Pound and then paired with the US dollar. So you just pronounce it as GBP USD. And then we have the AUD USD, which is the Australian dollar paired with the US dollar. And then you just pronounce it as AUD USD. Then we have the NZD paired with the USD, which is the New Zealand dollar paired with the United States dollar. Then we have the USD JPY, which is the US dollar paired with Japanese yen. We have the USD and the CHF, which is the US dollar and the franc, Swiss franc, right? And then we have the US dollar paired with the CAD, CAD, which is the US dollar paired with the Canadian dollar. Now, these are the major currency pairs. There should be 7 or 8. 1, 2, 3, 4, 5, 6, 7. Yeah. Now, the major currency pairs have high liquidity and they are most traded pairs on the Forex market. So, ladies and gentlemen, these are the major pairs. And remember, the major pairs consist of the US dollar together with a country, or rather a currency from a country that is significant in the world. So now let's look at the cross pairs, ladies and gentlemen. The cross pairs are pairs which exclude the US dollar. Now, to exclude means you will not find the US dollar in this pair. Now, let's look at this. There are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah. So we have CAD JPY, which is Canadian dollar paired with the Japanese yen. We have the Swiss franc paired with the Japanese yen. Euro AUD, which is the euro paired with the Australian dollar. Euro CAD paired with the euro and the Canadian dollar. Euro CHF, which is the euro paired with the Swiss franc. Euro GBP, which is the euro paired with the Great British Pound. Euro JPY, which is the euro paired with the Japanese yen, and etc., etc., ladies and gentlemen. So all these, if you see, we don't have a USD currency in these pairs. So now these pairs are called the cross pairs. They're actually also traded. I also trade these, and I love them as well. Now the last category is exotic pairs. Now these are pairs from nationals of less significance. I mean, together with the USD. So there are a lot of them, and some of them are not even listed. So we have the USD together with the Russian rubles, and we have the Mexican, and I don't know what this is, but you know, if we were to put Zambia here, it will probably be here, and you have USD ZAR, you know, it's also part of the exotic pairs. And I do not encourage you to trade these as you've just begun trading. I would rather you stick to the major pairs as well as the cross pairs, right? Yeah. So otherwise, we won't even pay much attention to these. That is about the grouping of these Forex pairs, and that is basically about what Forex trading is, and we shall know as we go in detail how we can actually trade and some of the things that we need to know. Otherwise, for now, that's it, ladies and gentlemen, and I'll see you on the next lesson.